Among friends here, and nobody's watching. Andreas, hell, we're over a cup of coffee, and it's December, whenever it is, and you guys have to make some tough decisions. Are there going to be layoffs on the sell side? I mean, the one thing that I know is everybody's got to cut a paycheck on a given Friday to pay these guys a lot of money. I mean, CFAs, et cetera, et cetera. Are there going to be layoffs on the sell side?
Well, I can't tell, but let me give you two insights. The first thing that we've done in our firm is to give our negotiators a very clear maximum budget that they can't exceed. So we know that, that's what we've got, and we're going to have to get the most that we possibly can out of that. So, not to interrupt here, but so you have to go to fewer players. That's where this is heading. That's most likely one of the outcomes. The other point I'd make, though, it doesn't necessarily lead to layoffs. If you look at 2008, 2009, when equity markets collapsed, and therefore the revenues of our firm collapsed, we had a tough choice to make at the end of the year. Do we lay off people, or do we cut comp? And I surveyed all my senior team, and they were all in favor of cutting comp, on the view that this was more likely to be a cyclical rather than a structural phenomenon. Now, this is going to be a call that the investment banks are going to have to make. Is this a more cyclical phenomenon, after which there will be an increase in revenues from research, or not? Difficult to say.
We're talking about consolidation. You were saying that, of course, all of this onus and this regulation will play a part in consolidation. But so far, most of the consolidation was because of the passive versus active. Yep. So how does this, how much does regulation exacerbate the consolidation movement?
On the investment banking side?
Yeah, on the asset managers.
Massively. I think it's massive. The cost of, for example, our compliance and our legal department, our risk department, have risen many-fold over the past 5 years. I don't even know exactly the number. I just know that that's the biggest area of FTE growth, full-time employee growth, that we've seen over the past few years. Similarly, if you look at the number of regulatory exposures that we have on a constant basis, we operate in 26 countries, it's just massive. So a lot of smaller players, including some smaller hedge funds, we've seen a consolidation there as well, are taking the view that it's no longer profitable for them to invest in those type of resources given the margins that they can expect.